Rosenblatt from Urban Digs, and this is your July Manhattan market update. Let's see what's going on out there. I'm on the Urban Digs chart room right over here. The first thing that pops out to my head is this market pulse. You guys know how I feel about market pulse. This is your barometer of the market. If it rises, we're doing good. If it falls, we're doing bad. Is it a buyer's market? Is it a seller's market? Et cetera, et cetera. This is just a function of supply and demand, and it's down 10%. And the main reason is you got supply up 9%, you got pending sales down 2%. You add those factors together, and the market pulse is down year over year 10%. So the current barometer, the current temperature of the Manhattan market right now continues to be cool, and buyers have the leverage. That's what that's saying. If you want more proof of that, just take a look at days on market right here. The time it's taking sellers to sell right now, this is the seasonal marketplace. This is when things are supposed to be trading. It's taking 40% longer to trade, around 85 days. Now you're looking at the price trends and you see vastly different things. You see median sale price up 9% year over year, and you see price per square foot down 1% year over year. So what's going on here? I always like to tell people, when you're looking at linear price action over time and you want to see whether or not something is going up or down over time, your smoother variable to look at here is price per square foot. That's your linear price trend metric that you want to look at. That's going to factor out a lot of the noise that median sale price has when it comes to a lot of higher end or lower end properties that happen to be trading in one month versus another month. So median sales price will be a little more volatile, more exposed to what types of properties close and when. Price per square foot is a little more linear. So if it feels like this market's down, and my dog agrees, if it feels like the market's down, price per square foot is showing that we're down 1% year over year. We're not up 9% from the last year. That's not really what's going on. That's really a function of just sales dynamics. When I look at monthly contract activity, this is the indicator of demand. We are down. We're sluggish, 6.4%, 893 contracts signed in June. This is the time of year when the market starts to slow down. We are slowing down. We didn't really have an active season in 2019, so that's what it is. And at the end of the day, sellers, right now, you got to go down about 7.5% to get a deal done, okay? My dog's not liking this at all. These numbers are bad. So if Roxy doesn't like the numbers, I don't like the numbers, but the market is what the market is, and the data is what the data is, and the market does what the market wants to do when it wants to do it. So sellers, just hear the call of what's happening out there. Leave some negotiability, price right, expect to negotiate, expect around 85 days before you trade, and let the market do its thing. Noah Rosenblatt from Urban Digs, July Manhattan Market Update. We'll catch you next time.